right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Welcome in, Axel, Yeshwanth, R Pink. Thank you so much for being here. Thank you for modding. Reba, Brent, John Foster, Melissa. It's good to see you, Melissa. And the Norm Swede. Welcome in, everybody. Guys, we are dumping and we are losing some critical support right now, being the value area low, our golden pocket, and our daily level of support. And if Bitcoin does close the daily candle below this support, we are going to be in trouble here. Really, what I'm looking for right now, and I updated about this in the Telegram, is my last hope for today is that we can SFP these local lows coming in right now and then see a push up back above the golden pocket before the daily close. But if we do not, we are going to be in trouble, guys. And earlier this week, when we swing fail pattern the range highs into our pitchfork band up here, I was concerned that we were going to see a bigger drop down to this 108K level. We were looking at a possible impulse to the upside, a multiple 1-2 impulse, but that got invalidated during Tuesday's stream. And after that got invalidated during Tuesday's stream, I said it was highly likely that we were going to come down to this 108K level, and we wanted to see this hold as support. Our macro golden pocket pulled from the 103.5K lows to our highs that we made on Tuesday. Now we are losing that, and we are not really seeing, actually, as we were seeing in here earlier today, we were seeing a lot of long step in on the order flow. We were seeing some long positions step in here, and those long positions could not sustain the price. And now we are dumping through, and a lot of those longs are getting squeezed out as we speak, and we are continuing to drop lower and lower. We were also seeing some pretty bad bearish CVD absorption in this area that I described in the video on Tuesday and yesterday. Actually, it was yesterday I described that in the video yesterday. And so this bearish absorption is playing out. We are dumping here. And the fact that we are right now flirting around and trying to bounce right before grabbing the liquidity, at least on Coinbase. Let me see if Bybit grabbed that liquidity. But the fact that we are flirting around and not seeing a clean SFP right now. Okay, did Bybit get that? It looks like Bybit did get a very slight SFP, but guys, that is not enough to stop out really any traders. And I want to go into some high time frame pitchforks. I want to go into some high time frame analysis here, but we could be really starting a much bigger drop to the downside. Yes, we will see bounces along the way. Those bounces could last a week, 2 weeks, maybe even a month, but we might be starting a macro downtrend here, down to 96.5 or even lower. And I hate to be the bearer of bad news, but we did see this coming on the charts with the technical divergences, the bearish divergences on the weekly time frame, on the monthly time frame, daily time frame break in market structure, and the crash that kind of started it all. So let's get back to the Coinbase chart here real quick. Coinbase did not SFP the lows. I was waiting. I always watch the Coinbase chart, and Bybit SFP those lows so gradually that it really is not enough to stop out those traders that put their stops below those lows. Guys, this just doesn't look good here. Our hope for today, if we want to remain bullish, is that we can get back above really the value area low, golden pocket area, and close our daily candle at or above this general region of support here. And then we might be able to see a reversal. But if we look on our oscillators down below, we can see on the hourly time frame, money flow still coming out on the 1 hour time frame. We do have slight bull divs here. But we remember, when you have one drive of slight bull divs and your money flow looks bearish, the money flow is always going to overpower that. Now, we were building some nice bull divs here on NAMI, but now with the drop that we got today, with this momentum wave, we've invalidated those bull divs. We do have a new set of bull divs printing on NAMI here. But the money flow, once again, the money flow is still draining out here on the 1 hour time frame. Now, if we go to our 4 hour time frame, which is a very good time frame to look for more potential day trade to swing long trades, you can see here that we do have money flow about to cross over into the red here. No bull divs on the chart. NAMI does have potential slight bull divs that are forming here. This momentum wave has not bottomed out yet, and our money flow is also leaving really kind of aggressively here. And one drive of bull divs is not going to overpower that bearish money flow. So, it's not looking good for Bitcoin here. It really is not looking good. Zooming out onto the 8-hour chart. On the 8-hour chart, our money flow was attempting to go up, but if we do close a couple more red candles like this money flow is going to start to roll over, and you can see our momentum wave is really not even close to bottoming out. Now on on NAMI, excuse me, we did see the money flow bottom out, or the momentum wave bottom out here, but the money flow is still kind of aggressively leaving here. And it's just not looking good. In order to see some bull divs on the chart on Market Cipher B, we would have to take out those lows at 103.5 in order to get those proper bull divs that we want to see. So it's not looking good. If we do drop and not SFP these lows down here, I do think eventually it might take a couple days. It might take throughout the weekend into next week, but I do think we are going to be coming through our 103.5K lows. And if you guys remember, we were talking last week about a level of support that we do have around 101K. So around 101,250. And then if we turn on our daily levels, right at 101K, we do have that naked daily point of control in confluence with the daily. And this is also pretty much where the liquidity is for the Bybit lows. The Bybit lows that from that crash that happened, because this wick on Bybit was a lot larger. And so that is a level of interest that I would be interested in taking along from there after we take out the lows on Bybit. And that's about it, guys. But you can see here our daily level that we were looking at as support yesterday when we laid out this box here. Let me turn off these naked daily points of controls. We were looking at our golden pocket pulled from the lows to the highs. Golden pocket was coming in around 108.4 to 108K. Right below that was the value area low of our intermediate range, and then our daily level, and most importantly, our anchored VWAP from the 74K lows. So I've been talking about this and harping about this over and over and over on the live stream the past couple of weeks and the videos the past couple of weeks. But if we do start to close weekly candles below our key anchored VWAP from 74K, let's go ahead and zoom out a bit, and we will look at that key anchored VWAP. On the 2-day time frame, you can see that our key anchored VWAP from 74K, we did come down during the crash. We did bounce exactly from it during the crash, and then we even came back down, kind of wicked below it, but was able to reclaim it pretty much right away. And then we back tested it last Wednesday, and we saw a nice move up from it just to take out the range highs. But now, after taking out the liquidity of the dead cat bounce highs, this is what's very important here. Anytime you see a massive crypto crash or any sort of crash, asset crash, very volatile crash where you see major liquidations happen, a lot of positions getting wiped out, you will often see a dead cat bounce that happens. Now, actually, it was here, right here. And then we saw that dead cat bounce happen, and we bounced up to our key anchored VWAPs from our previous all-time high and from our 107K lows. So previous all-time high, 107K lows. We rejected those two anchored VWAPs. That was very important volume resistance. And also you can see here, it was our pitchfork band. We tried many, many times to get above that pitchfork band locally. For 2 or 3 days there, we tried to get above that pitchfork band. We couldn't. But that formed our dead cat bounce highs. Now, those dead cat bounce highs are very important highs because oftentimes after taking out the crash lows, which we did come down, we took out the crash lows, you will come up to test those dead cat bounce highs. Now, if you reject after taking liquidity from dead cat bounce highs, you can see this thing come right back down and grab new lows from the lows that were made after the crash. And that is looking more and more likely now because we did come take out that liquidity. We stopped out all the longs that opened up from the crash lows that, they just FOMO'd in knife catch longs in here. And now we are, after taking that liquidity, we are dumping aggressively here. Another thing that I would like to say, let me go ahead and zoom in onto the 1-hour chart. And I've been talking about this throughout the week as well. So obviously the pitchfork band was acting as resistance here. And if we zoom out, it's just a bunch of wicks. If we zoom out onto the 4 or 6 hour time frame, it's just a bunch of wicks above the pitchfork band that we saw on the dead cat bounce. Now we came up and we rejected that pitchfork band again. We took the liquidity of the highs and we rejected the pitchfork band again. Upon rejecting that pitchfork band, we said if we do lose our 112K support, we have a high likelihood to at least come down and back test the bottom of the pitchfork. But the other day, on Wednesday, yesterday, when we fell through that pitchfork, I immediately in the Telegram said, guys, watch out because we fell through it pretty aggressively. We came up for a back test of that pitchfork band. And I said, guys, if we reject this pitchfork, the bearish back test of this pitchfork, we will make new lows most likely. Well, we did reject the pitchfork. We came down, made new lows. We came up a second time throughout that same day yesterday, and we rejected it a second time, confirming really that the market does want to come grab new lows. And so, sure enough, we came down, we grabbed new lows overnight. We kind of bounced from that golden pocket area, bounced from the golden pocket area, saw a little nice move. For me, it was overnight mostly, saw a little nice move up, but we continued bearish market structure, making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Now we are continuing with the lower lows here. And so nothing really is showing us a sign of strength yet because we are losing key support. We have bearish market structure, and we are not seeing very many bull divs on the chart. We are seeing more bearish money flow on the chart rather than the bullish money flow with bull divs that we want to see. Now, I will say this. What we've been seeing for the majority of the day here, the last couple hours of the day, we are starting to form that kind of selling exhaustion that you see towards the end of an aggressive move. You often get these descending channels that chop, and after bouncing from a level of support, you can oftentimes see a little bit of at least a relief rally. And you can see here on the 15-minute chart, we are developing some nice bull divs, and the money flow is finally starting to bottom like we like to see. And this is exactly what we want to see if we can SFP these lows. If we can SFP these lows with the confirmed low time frame bull divs, low time frame money flow coming up, that'll at least give us an opportunity to take a long position. And I posted about this in my Telegram community. If we do SFP these 106.6K lows. So what does that mean? That means we wick past, stopping out the stops that are down below, and then get back above it. The second you get back above it, you can look for the long with your stop going below wherever that wick is. And at this point in time, I would have to say for me, a TP1 is going to be the back test of the value area low. And actually, it's not going to be this value area low. It's going to be the value area low of our range for the past couple of weeks. So let me zoom out to the 3-hour time frame real quick. We'll throw that range on. Pretty much the range since the crash ended, which is this range right here. And I would be looking for a back test. Yeah, that value area low is pretty much the same anyways. I would be looking for a back test of that value area low in order to at least take some TP off the table. Now, I know what some of you guys are saying here. Well, that's only a 2-to-1 risk-reward ratio. Is that worth it? It's all going to depend on how big this wick is past this SFP. If we get a very aggressive wick here, and then we come back up, it's not going to be worth it to take the trade because then we're going to have to, our risk reward is not going to be worth it for a TP1 at that value area low. And why am I looking for a TP1 at that value area low? Because anytime you are in a range, hold on, let me just get rid of this here. Anytime you are in a range and you start to lose that range and close candles below the value area low of that range, and you can see we are starting to close candles, 1-hour candles below the value area low. And also, if we look at our volume is pretty high on losing that value area low. Even if we SFP local liquidity below us, it could be just a fake out where we grab that liquidity, come up to that value area low, now bearishly backtesting the range that we just lost. And if you reject, you confirm rejection, and now you're going to confirm dropping to the next major support levels. And so it's going to be interesting to see what happens here. We might get this live during the stream. If we do, we can kind of walk through that live during the stream. But the fact that right now Bybit did a very shallow SFP of that low, Coinbase did not SFP the low, and let me see if Binance got that low. Binance here did not SFP that low either. So it's when you see different exchanges kind of seeing this wonky price action where a couple of them SFP and one of them SFPs, most of them don't. That is more likely that this swing failure pattern is not going to work out and that we probably are going to keep dropping here. And I also have to say, if we look at our confluence, you guys often know that I use the total market cap as confluence. And if we come onto our total market cap chart, the range that we've been seeing on the total market cap chart, not only are we losing our golden pocket, but we are losing the value area low of that range. And you can see we're really kind of dropping quickly and rapidly here. This thing could continue dropping. And volume is pretty high here. Now, I understand the volume on these total market caps is a little bit wonky on TradingView, but man, the last hope for the bulls, you guys. We really need to SFP this coming up low here on total market cap, and then close the daily candle back inside of our range at or below that value area, at or above, excuse me, that value area low. Or we could see more massive dumpage coming. And honestly, I have to say here, with the way the total market cap looks here, we are losing that pitchfork midline, and we could see a drop all the way down to the pitchfork band, seeing another massive drop down to $3.21 trillion. And that would just totally wreck the altcoins. It would totally wreck Bitcoin, Ethereum, and we could see a lot of the larger impulsive price action be invalidated. So I'm going to go into some high time frame pitchforks here, guys. I want to show you some high time frame market structure, high time frame pitchforks, and explain to you what could be coming, why we could be starting a larger bearish cycle here. I do not want to be bearish. I am not some perma bear coming in here or even bear. I am looking at the technicals here, and I am getting concerned by what I'm seeing at the technicals. Now, I know the last couple of weeks I have been concerned as well, telling you guys that especially with this crash, invalidating a lot of the impulsive price action that we saw on many altcoins and specifically Bitcoin, taking out those 107K lows. We were really looking for after taking out the range lows at 107K, we were looking for lower highs to come in on the charts before making lower lows, because we had a bearish break in market structure. Market structure is king. Remember, when you're looking at the market, in order to truly be confident, you want to have market structure on your side. The trend is your friend until the end. A bit silent. Okay. Can you guys hear me now? Is this better? Check, check, check. All right. Let me know. Is this better in the chat? I'm sorry about that, guys. Hopefully you could hear. Let me know, guys. Is this okay for you? Guys, let me know. Okay. There we go. Mark Dutch, thank you so much for that warning. Axel, thank you for the warning. Volume is good now. Okay. Okay. Audio. Yeah, guys. I have major problems with audio. I have such a good mic, and I even have like a professional XLR setup here, and just mic issues for me, man. Someday I'll get it right, guys. I am sorry about that. Someday we will get this right. All right. So for those of you that didn't quite hear that, pretty much I am concerned about the bearish break in market structure. I am concerned about us losing some key support. You know, that 108K support that we were really looking at today was really key. We really needed to hold this level. It is the value area low of our local range, but also if we throw on that bigger range that I talked about in yesterday's video, after combining the two ranges together, after this impulse from 74K ended, we got that three-wave corrective move. So after that impulse ended, because we have some wickage back into that range, we can combine the two ranges to make one range now, because we did have some wickage into that prior range. And when you combine those two ranges after the impulse ended, you can see that we're even losing the value area low. They're pretty much the same value area lows. We're losing the value area low, and we're losing it pretty aggressively here. To me, this is not good. If we close a daily candle below the key anchored VWAP of 74K and below our key value area lows, that's important volume support that we are losing after breaking market structure bearishly by taking out our 107K lows. These are all bad signs of a larger correction to the downside coming, a much larger drop. So I'm going to go into some high time frame pitchforks for you guys. I'm going to go into a few different things here, but let me just welcome in the chat real quick. Thank you guys all for joining. Khalid, welcome in. Mark Dutch, welcome in. Caleb, what's up, man? Welcome in. It was good to see you earlier on Jason's stream. Massey33, much love to you. Welcome in. Time Attack, thank you so much for being here. Thank you for modding. Chipotle was the signal that we topped. It's all over. You know what? Time Attack, you called that a couple last week, I think that was. So maybe we got to start listening to that Chipotle signal that Time Attack gives us, and he gives us a lot of good information. I appreciate you being here, Time Attack. Nilesh, welcome in. Samuel S., what is up, man? Enjoy the dump, guys. Let's break down more. Well, Samuel S., I did get stopped out on some long trades, and I lost a SUI trade earlier today, so that was a bummer. But and Dr. X, welcome in. But you know what? We're just gonna go with whatever happens here. As traders, we be prepared for both scenarios, and now we just got to be patient and wait. And guys, if we're dumping like this, it is often best to wait for a little bit of a range to form or to actually hit a support level to start looking for positions. And like I just said on the 15-minute chart, we are starting to develop some nice little 15-minute. Looks like we just see. I don't like this SFP here, guys. This is a very shallow SFP, and but we are seeing, that kind of bottoming channel that often forms on seller's exhaustion. After a big move down, you'll start to get some chop in here. Let's see if we close a 5-minute candle above this thing. We already did close a 5-minute candle. Do we have 5-minute bull divs? We do have some 5-minute bull divs. We have some 15-minute bull divs. All right, let's check this out. I'm going to say right here, stop is going to go below the low. And then we are going to be targeting those value area lows. That is not good enough for me, guys. I can't take that trade right now, just based off of us being below the value area low. Now that we've kind of SFP'd this low, if we can get back above our anchored VWAP and our value area lows, then I could look for a little bit of a relief rally long. And we'll look at that when the time, if and when the time comes. But we are seeing some signs that we could get a little bit of a relief rally, at least for the day, maybe even up to the VWAP before more down. This looks nice. Money flow's finally starting to bottom out here. And then on NAMI, we have the nice bull divs and money flow bull divs as well. But let's actually check out our order flow here. What do we see here on order flow? So still massive dump in OI. Let's zoom in here on the 5-minute chart. Are we seeing some long step in? Yeah, we are starting to see a little bit of long step in. You can see our open interest is now starting to come up a little bit in the last 20 minutes. And those are long positions coming in here, the last little bit here. So we are starting to see a couple people long that SFP, that liquidity grab. And some of that, of course, is going to be, you can see when we first hit the liquidity grab about 30 minutes ago on Bybit, we saw CVD going up, but open interest going down. That was positions getting stopped out. And that's what a forced market closing of a market short is a market buy. And that's why we saw CVD going up, market buys, but open interest was going down, means it was positions closing out, not new positions opening up. And we want to see new positions opening up at support really to get that nice, healthy move to the upside. Okay, let's get back on track here. This is a trading zone for me, so I don't want to miss this. But I also want to go into some of this larger analysis with you guys on the Bitcoin price action. John Doe, welcome in. Yeah, greatest wealth transfer in history. You're right. JB, welcome in. Perma Bear, good afternoon, Perma Bear. Definitely not a Perma Bear, man. I wish, if anything, I could say I'm a Perma Bull as far as the technical crypto industry goes, but I'm a trader first and foremost. ZVXA, welcome in. Nonsense. It's good to see you here, man. Thank you for letting me know the volume's good. Making Network Millionaires, welcome in. Kaliku, sorry if I butchered that. Welcome in. Claygate, welcome in. Guys, and Mark Dutch, thank you for being here, man. Thank you so much for being here. I appreciate you, modding. Sudeep, welcome in as well. Thank you for modding. Liberty and Trust, Rodriguez. Okay, guys, let's go ahead and get into this a bit here. So I want to go on to our Bybit chart. Now, this pitchfork, I'm going to zoom out here onto the 2-day time frame real quickly, because this pitchfork has really guided me through the entire year of 2025. And I've had this pitchfork on my chart for over a year now. This pitchfork was pulled based off of our Elliott wave structure. Really from the beginning of the bull market, we've been looking at a 5-wave impulse to the upside in our Elliott waves. Let's see, we don't have that on the chart. I'll just kind of a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5 here. And then we're seeing a potential flat correction come in after that 5-wave ends. But what we're seeing here from the very first after our bullish break in market structure on the daily time frame. Actually, let me go to the 3-day time frame. But it doesn't matter if it's the 3-day time frame or the daily time frame. On a high time frame, we broke market structure bullishly by taking out this high here. You can see we didn't quite take it out here, but once we finally took it out, we flipped it to support, but then we came back down, grabbed the liquidity of this little range here, this flat correction. This was a flat correction in here where you take out the range highs, then you come take out the range lows in a flat correction, and then you pump. Now, this was also around the BlackRock listing when BlackRock listed or said it was going to apply for a spot ETF. Of course, that caused a very volatile move to the upside. So that was our most, in this bull market, that was our most aggressive volume filled move to the upside. Now, from that Elliott structure there, wave 3 Elliott structure, we can pull a pitchfork because we know that was a very, as far as sentiment goes and as far as price action goes, that was a very, very key low in the market where we did see now very bullish sentiment coming afterwards. So you pull a pitchfork from that swing low up to the 2024 all-time highs, which there was a reason why we rejected there. It was a macro 1.618 Fibonacci channel resistance. And then down to and then we ranged for 8 months in 2024. We ranged for 8 months, really waiting for the election results. And that low that was made was a key wave 4 low or a corrective range low. So you go from the all-time high, from the lows to the all-time high to that corrective range lows. And this pitchfork should give you a very good estimation of where you're going to end your 5th wave. Generally, it will give you a pretty good estimation of where that macro high could come in. And you can see here, when everyone was calling back in January and December for 150K, I was saying, guys, I'm taking profit on alts and I'm taking profit on Bitcoin, expecting a major correction. Well, we did reject the top of that pitchfork. We ranged for a couple months between the pitchfork band and the top of the pitchfork, really seeing a couple rejections from the top of the pitchfork. Once we lost that band, we dropped to the lower band. Of course, that was our 74K lows. But what we are seeing now, what the point is this pitchfork for over a year has been really, really great for predicting high time frame swing trades and high time frame support and resistances. You can see very recently in our upper band, we rejected from the lower part of the upper band, then we rejected from the upper part of the upper band, and then we kind of rejected the middle of it. After that, sideways range. But in this sideways range that we've been experiencing the past couple of months, what was important in the past, now I'm going to zoom in onto the daily time frame, or let's just do 2-day time frame now, a little bit more in here. You can see that we bounced from the midline perfectly, got a nice move up, bounced from the midline perfectly, not perfectly this time, bounced from the midline after a deviation, got a nice move up, took out the range highs, or took out the highs, made an all-time high. And then those were range highs as well, but made a new all-time high. But now, since the big crash happened, this is what was key. This crash changed everything, guys, because this crash finally took out the range lows and broke market structure bearishly for the first time in a couple months. We saw a big bearish break in market structure. Now, because we have broken market structure bearishly, you at least have to start putting warning signals in your brain as a trader. We could be having a macro momentum shift from bullish, higher highs and higher lows, to now bearish, lower highs and lower lows. And we did break it. We did bounce from our anchored VWAP. You can see some wickage past it, but really bounces from it. And this is the Bybit chart, but on Coinbase, we bounced perfectly on that crash from the anchored VWAP. And we did come up one time here, rejection from the midline, which was acting as support, now acting as resistance and resistance. So if we now zoom in on the chart onto our 4-hour time frame, where did we reject earlier this week after taking out the range highs, the dead cat bounce highs, which I explained while the volume was low. These dead cat bounce highs are very, very important because anytime you see a major dump like this, you will get some traders that are aggressive that try to knife catch, that long all through here. You'll get somewhat of a bounce, and then the highs from that bounce are very important. There's liquidity above those highs. And after we saw some shorts that moved the market down for a week, we came up in mostly a 3-wave corrective move to take out those highs, to stop out that liquidity. And now the downtrend looks like it could be starting to continue to make new lows. But look at what happened here. We rejected the pitchfork midline here. And now that we're rejecting the pitchfork midline after it was holding so nicely as support, we could see a drop all the way to our lower band of the pitchfork. And that lower band of the pitchfork is coming in right around our key daily levels. Let's just zoom out and we'll throw that daily level on real quick. We have that daily level coming in around 101K, 100.9. But also there is a naked daily point of control, which is not, it's probably not going to populate here on the chart because the PVP doesn't go back that far. But you will just have to take my word for it that we do have a naked daily point of control, at least on Coinbase at 101,250. If we look at that Coinbase chart at 101,250, we can go ahead and throw on our naked daily points of controls. And you can see here, 101,250, we do have a naked daily point of control there. And so if we drop to that next major pitchfork band, guess what? That's going to be right around that area of support. It would also be an SFP of the crash lows on Bybit. Crash lows on Bybit into your naked daily point of control and into your daily level. That is if and only if we start to close daily candles below this anchored VWAP. We really do not want to start closing daily candles below this anchored VWAP. You can see here, huge wick past the anchored VWAP, no daily candle close. Actually, the daily candle close was all the way up here at the pitchfork midline. Here on the dump, daily candle closed right below it, but immediately recovered it the very next day. We were underneath it for a couple hours, and we closed the daily candle, the next daily candle above it. Then we rejected from the midline and the anchored VWAP. We bounced from the 74K anchored VWAP. But now after seeing the harsh rejection of the midline, if we close today's daily candle below this anchored VWAP, it is not going to be a good sign, guys, because it's testing as support. Support getting weaker, support getting weaker, support getting weaker, support breaking through. And we do not want to see this support break through. And especially if we close our weekly candle below this anchored VWAP, we could see massive dumpage continue to the downside. Now, that is this key pitchfork pulled from our wave 3 Elliott impulse of this cycle. That is of this cycle, the BlackRock listing. BlackRock listing, 2024 all-time high, 2024 correction lows. So this can give you your example of what the price action is going to be like, major levels for what the price action is going to be like for 2025. But now let's go on to our macro multi-cycle pitchfork, and this goes back, and if you see, we'll zoom out here and I'll show you, and I know I've shown you guys this a lot if you're a regular to the channel, but from the COVID lows to our 65K highs, which was actually the highs as far as volume goes, as far as the volume and the amount of money that was in the market. Of course, we did make a new high, but that was more of a kind of a corrective move to fake people out before getting the real bear market. And then our bear market lows. And you can see how well this pitchfork has been respected. Rejection, bounce, flip it to support, rejection midline, flip to support, get above the midline, but see that distribution range. And then now what happened on our all-time high, this last all-time high, our most current all-time high? What happened? We came up to bearishly backtest that pitchfork midline after kind of forming a range here, a distribution range, which I did say it was more likely to be distribution based off the bear divs we were seeing and money flow draining out of the asset as the range was forming. And we rejected that pitchfork midline very, very aggressively. And that's when we saw the big crash. But now we are continuing this bearish price action. So that is also a bad sign that after trying to get above it a couple times, we failed auction there, failed there, fourth time failed. And now could we be about to really see a major dump here? We have the high time frame bearish signals on the chart with bear divs on the chart. And you can see that really our next major pitchfork band of support is not even coming in. Really, it's going to take us a while to get down here. So around 80 to 82K, I would say, is the top of the pitchfork band. But the bottom of that pitchfork band is going to be in confluence with that macro golden pocket pulled from your 49K lows up to your all-time high. Golden pocket coming in between 70 and 68K right there. And that is going to be a very key support if we do see a massive drop down to that general area. And that would mean that this could be a distribution range that is playing out and we're distributing down. Now, let me go ahead and go on to a couple more pitchforks here. Let's see this. So I'll turn off that macro cycle one. We will go into this guy here. Yeah, this is just pulled from the 49K lows up to your 108K highs down to your 98.2K lows. But you can see as well, we rejected the upper band. Now we're losing the midline and we're trying to hold our local lower band of support. really trying to hold this level. There is still a possibility we can hold this, guys. But if we don't, we're going to come down to, really by the time we get down, it's going to be close to 96K where our macro POC is of the 2025 range. If we just look at that range, you can see that POC. Okay. I guess on Binance, it's a bit higher. That POC's at 104, but on every other exchange, yeah, it's about 96.5. You can see, and that would be right near the bottom of the pitchfork. All right. And then let's go to our other chart here. Okay, not that guy there. This is the pitchfork I wanted to show you. Now, this pitchfork isn't a technically proper pitchfork, but here's the thing, guys. With any sort of indicator, whether it's Fibonacci fans, pitchforks, trend lines, channels, whatever, the more highly respected it has been in the past, the more likely it is to be respected in the future. Now, I have to say, this thing has massive respect. You're going from your mid-cycle lows, your mid-cycle bear market lows, your summer bear market that we saw in 2021, up to the 69K all-time highs, down to the bear market lows. And if we look at this pitchfork, I mean, once again, massive respect. Flip the band to support. What was acting as resistance, flip to support. Break above the midline, kind of flip it to support. Come up to the upper band. Reject multiple times from the upper band. Reject multiple times from the upper band. Then you go reject from the lower part of the upper band. And then after that, you break up to the very top of the pitchfork where you can see our 108K all-time high. Rejected, absolutely perfect in this distribution range at the beginning of 2025. Rejected the top of the pitchfork. Then we made one more attempt after bouncing from the bottom of the upper band. After bouncing exactly from the bottom of the upper band, made another attempt to try to break out of the pitchfork. You saw your 3 taps here, distribution range. Remember, tap 1, tap 2, tap 3. Tap 1, tap 2 is always tap higher than tap 1, and then in a Model 1 distribution, you will get your third tap is higher than your other 2 taps. And you can see we had that kind of range formed in here, which we were saying a few weeks ago kind of looks like distribution based off of the money flow on the daily time frame. As this range forms with confirmed bear divs on the chart, money flow draining out as the range is forming makes it more likely to be a distributive range where we dump down from it. And this could be the start of a major dump to the downside, where we're also rejecting the top of the pitchfork, and we could come visit this pitchfork band again, which here, once again, that 90K level, around 90 to 92K coming in very clutch, which is the value area low of our range. If we look at our range, the value area low of the range is going to be coming in right around that area. Guess on Bybit, it's a little bit higher. On Binance, on Coinbase, it's about 91K, 91, 92K. And then if we lose that value area low, we could be coming all the way down to the low 80s and potentially even taking out your 74K lows. Bear market, 50s. We could be seeing 50s come down. So this is very, very important, guys. I mean, multiple high time frame pitchforks showing bearish rejections on the chart. And one last thing I want to cover here real quick. And Sudeep, to answer your question, yes, I absolutely can cut this last 15 minutes and make it a kind of a pitchfork explainer video. Thank you for the suggestion. I absolutely will do that. Real quick, guys, I'm just going to go into the macro Fibonacci channel, and then we'll get into the chat. Then we can get into some of the altcoins and actually what's happening currently right now on Bitcoin. But this, I feel like this is important to cover right now because today's daily close and really specifically this weekly close is going to be very important in letting us know kind of our future for the price of Bitcoin, maybe our next, months for the price of Bitcoin. So, okay, let me grab these here. Now, another thing, guys, I have to say with our local pitchfork, I talked about this yesterday in the video, but losing that pitchfork was bad. And we lost the pitchfork and we back tested the pitchfork twice locally and we rejected. And this was our bearish. So the thing with a pitchfork is it's really just measuring a trend. It's giving you your key Fibonacci points in a trend, a dynamic Fibonacci. Because when you're pulling a Fibonacci retracement from a swing low to a swing high, it's a horizontal support level or resistance level, depending on how you're pulling it. But how you can measure that in a dynamic way that changes with time is by a pitchfork. You're measuring a trend. In this case, this was a bullish trend we were measuring. And if we wanted to maintain our bullish trend, then we really wanted to maintain this pitchfork and continue trading with inside the pitchfork. But because we're losing the pitchfork, now we're saying, oh, guys, the trend is not only weakening, but maybe it's failing and reversing to a bearish trend. Okay, looks like, let me check this out. I think we just got a nicer SFP of this low. Yeah, we're getting a little bit of an SFP of the low. I don't like the way this is playing out, guys. I don't like the way this is playing out with Bybit hitting it before. Now Coinbase hits it, but now we get another SFP. I just don't like the way this is playing out. I am not comfortable taking this. Yes, we are seeing some slight bear divs on the 15-minute and under, but to me, this just does not look good. I need more. I need more, especially with the way we've been getting stopped out on longs today. I've only taken 2 trades today, but I got stopped on both of them. Okay, let's go into that macro pitchfork. So let me go ahead and turn off our pitchfork that we just lost. Let's hide our boxes. What is going on here? There we go. Okay, and with our macro analysis, where is that? We have a parallel channel, and I want to go into this parallel channel real quick. I'm just going to zoom out to the 3-day time frame. So from the very start of the bull market, this was the way we kind of knew it was the start of the bull market. I described this a little bit earlier in the video, but in a bear market, you're continually making bearish market structure on a macro level, lower lows and lower highs on a macro level. You start to get a bottom here, but really when you can say, hey, maybe we're shifting to a bull market, if you're playing it really safe like some of the big guys do, you're waiting for a high time frame break in market structure. And actually, the first high time break in market structure was right here, where we broke the daily high. We broke through it, and then we back tested it right here. You can see broke through it, back tested it, made new highs. Yes, you saw a dump after that to take out your range lows, and then you pushed up again. But even on a weekly time frame, if you go onto a weekly time frame, this was your first like weekly break in market structure, breaking above that high. So that's very important to know that now, guys, we could be actually shifting into a bull market from a multi-year bear market. Now we could be shifting into a multi-year bull market. Okay, so now that we have our key bear market low, and we know this was a key low because we broke market structure bullishly by taking out not only this high here on the daily time frame, but also by taking out the weekly high, we've now shifted market structure bullishly. Okay, so that bullish market structure break gives us this is a key low. Now, after making a bullish market structure and coming up and breaking our weekly high, we had a nice high up here, a nice impulse up here. And at the end of the impulse, that is going to now be a key high in the market. And then you get your flat correction, taking out your range lows down here. This was a flat. If you look up in this, this was a very technical range here. So you had your drop, then you pushed up, you took out your highs of the range, you SFP'd your range highs. You can see that SFP of range highs. Then after SFPing the range highs, you come take out the lows. You SFP the range lows here. Did we SFP? I think okay, it was more like a double bottom of those lows, a running flat correction. But either way, it was a flat correction in here. And then we started the big push to the upside. So from those 3 key lows, from this low, high to low, we can create a channel. And that's going to be the start of your bull market trend. Very, very important to have that bull market trend starting there. And once we've started that trend, now let me clean this up so it looks cleaner. After we started that trend, we can put this channel on, and it will generally chop within this channel, at least at the beginning of the bull market. It's called the base channel in Elliott wave theory. So we have our base channel. You oftentimes in your wave 3 will break out of the base channel and back test it and continue higher. Now in this case, we did back test it, but we made a lower high, and then we ranged for a bit longer, came down to the midline. Now, once you break out of that channel, though, in your wave 3 impulse to the upside, once you break out of that channel, and by the way, we did reject the top of the channel here at our macro Fibonacci golden pocket. If you pull that golden pocket, we did, if I can get there we go. We did reject perfectly the golden pocket and the top of the channel. We saw a $14,000 dump from that. I know that doesn't look like a $14,000 dump here, but we dumped from the top of the channel to the midline on hitting the golden pocket. And generally that's where we saw the 50% dump in prior cycles. In this cycle, we didn't. After breaking out of that channel, we now go to our next higher channel. So we can take this same exact channel, we can turn off the channel, the regular channel, and we can add our fib extinctions to it. So this is the same exact channel. You see the pink channel, 0, 1, 2. That's your 3 pivots there, right? But look at where our 2024 all-time high stopped out at the 1.618 Fibonacci extinction. This is exactly where I was taking profit and doing a swing short. And I shorted it all the way down to the back test of the channel. But we saw that correction. We dropped back in the channel, back tested the channel, came down to the golden pocket. Back tested the channel again, came down to the midline, midline, midline. That's your accumulation range in here. Pumpage, break out of the channel again. Now, what I would like to say here, I don't want to go too much more into depth on this. You can see the channel's been highly respected throughout the entire bull market. But what we've seen really since our first break in market structure at the very beginning, our first real big bullish break in market structure, the midline has held. We've seen some wickage past it, but really the midline is held on the weekly time frame. If we zoom out to the weekly, you'll see that that midline is really held. We've seen wicks past it, but no weekly candle closes below it. Well, what is happening right now on the charts is for the first time in this entire bull market, we have the possibility of closing some weekly candles below this midline. And I'm not talking, yes, we've seen some big wicks pass it before, but this can look bad. And guess what? We could drop all the way down to your golden pocket, which where does that happen to be? It will take some time to get down there. You know, we could see bounces and kind of choppage until we get down to golden pocket areas, 92K, 90K, where we do have other pitchfork levels of support. So just be aware that we could be starting a more macro downtrend. And I am not saying this is confirmed yet. Guys, this is not confirmed. This is the first day where we're losing our 74K anchored VWAP and our 108K support. We are not into hyper bearish mode yet. We still have the possibility of closing. And guys, if we do close above our value area low of our local range since the crash ended, this range here, if we close back inside the value area, man, I'm actually going to say I'm pretty bullish because we faked out, grabbed some liquidity, got back in the range. We could see another move all the way up to the top of the range or all the way up, you know, to the midline or to the top, the 618 of the Fibonacci channel. And we can also start to look at our pitchforks again. So I am not bearish yet, not hyper bearish yet. I am saying that this week could really determine whether we start to get more bearish long-term for larger moves to the downside, for bigger support levels to be hit, or are we just going to continue kind of rangy type price action and maybe make one more run at an all-time high within the next, by the end of the year? So yeah, we're at a pivotal point right now with Bitcoin. We really are. Anyways, that's kind of my spew on high time frame analysis here for you guys. I hope in some ways that was helpful. If it was, please hit the like button. Please share the video or subscribe to the channel. Whatever you guys can do to help the channel is really appreciated here. And I would like to, real quickly, before we go into some other altcoins, I want to just cover the partners of the channel real quick. The main partner of the channel is BYDFI. They are a VPN and KYC free exchange. If you do sign up using my affiliate link with BYDFI, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts on trading fees if you deposit larger amounts into the exchange. They are offering up to $8,100 in futures trading bonuses, depending on how much volume you move in the futures markets. And they're giving out some really great initial deposit bonuses. The highest initial deposit bonus if you deposit just $100, you can get a 50% deposit bonus, and then various 10 to 20% deposit bonuses, depending on how much else you deposit. I've also partnered with BYDFI to create a Telegram community where I do post my thoughts on the market throughout the day and some of my trade setups in there. If you're interested in joining that Telegram community, it is free. All you need to do is sign up with BYDFI using my affiliate link and deposit $100 into the exchange. That $100 is your money to trade with. You do get the bonus. You will get the discounts on trading fees. So for me, I see it as a win-win for everyone. And I just get a percentage of the trading fees that you're going to give to BYDFI anyways. I'll get a percentage of those. So for me, it's a win-win for everyone. Once you're in the Telegram, you're in, and it's pretty easy to get in. Just click the link in the description of this video after you deposited the money, and then type in /verify in your user ID number, which will be right up here, right up. For me, it's my name, but for you, it's probably going to be a string of letters and numbers. And then you're in the Telegram. Okay, next partner of the channel is NAMI Trading, and NAMI is this momentum and money flow indicator that I use for entry and exit confirmations on trades. For me, it's invaluable because as we were coming down to this 108K support earlier today, I was saying, actually was live during Jason's live stream, I was really saying this is not looking good for Bitcoin, guys. We're not seeing the bull divs we want to see down here. Now, if I didn't have this oscillator and Market Cipher B, we might have been coming down to support, and I might have just longed it on the first, longed it blindly and was hoping and praying for a reversal. But when you have an oscillator like this that can show you if you have confirmed bull divs or not, and if your money flow is bullish or not, it can help keep you out of bad trades. And so for me, these oscillators, both Market Cipher B and NAMI, are key. But NAMI here is a really good oscillator. The money flow is based off actual money flow, not an algorithm of it like Market Cipher B. And they are partnered with the channel, so I really do like using them. Even if I wasn't partnered with them, I would be using NAMI. They have a 50% off code if you're interested in purchasing NAMI. I don't know how much longer that 50% off code is going to be running, but they've partnered with the channel, and they're giving my affiliates 50% off. So if you're interested, the discount code Divine50 and the link are in the chat, in the description, excuse me. And then lastly, the last two exchanges are just MEXC and Bybit. Both great reputable exchanges. They'll give you discounts on trading fees and futures trading bonuses. If you want to sign up with either of those exchanges under my affiliate links, it's a way to help the channel and say for me to say thank you to me. Okay, guys, so that's it for the partners of the channel. Let me check the chat real quick, and then if you guys want to post some altcoins in the chat, we can cover some of the altcoins as well. And we'll just get into kind of the market today. We'll see if we can catch a trade or not. But right now, things are not looking too good. Adrian, welcome in, man. It's good to hear you too. It's good to see you. Okay, Decrypto, welcome in as well. Mr. C, we are cooked. Yeah. It's not looking too good right now. It's not looking too good. And Crypto Clown World, welcome in as well. Market structure bill might be passed by end of year. U.S. shutdown needs to end, but with all people with the cycle theory, I think we're cooked. But the FOMO potential is crazy. Yeah, it is towards the end of the 4-year cycle too. And so far, the 4-year cycle's never been wrong. So it really could still be playing out. We could be going into a bear market. If not, the 4-year cycle could be breaking. If it is breaking this time, it's because institutional money got in, like BlackRock, Fidelity, those guys, the big guys. But yeah, Mark Dutch, I have to agree with you. I do think 98K is still possible. 98K and 96.5K. Now, I do think we'll see at least some sort of relief rally at 101K, where we do have that naked daily point of control in confluence with a fresh daily level. Down here, I do think we'll at least see some sort of reaction from that level. And we have the weekly down there as well. Weekly, daily, naked daily point of control. Do we have a naked weekly down there? No. We do have a naked monthly at 105. Actually, never mind. That naked monthly I left on the charts, but that has actually been tapped from this area here. So we're going to get rid of that. Yeah, guys, we're not SFPing these lows. See, this is what I was concerned about. No SFP of the lows here. To me, this just didn't look like a healthy, what you would consider swing failure pattern. It still could play out, but look at your money flow here on the 1-hour chart. Look at your money flow on NAMI here on the 1-hour chart. Not good. And if you have one single drive of bull divs, and very slight bull divs at that, but your money flow is draining out that rapidly, guess what? It's not going to play. It's most likely not going to play out. And the fact that we saw Bybit hit it before the other exchanges, and we saw very shallow wicks on the first attempt of that SFP, just does not look good. Yeah, please. Thank you, Dr. Rex, for that comment. Show your appreciation, guys. Support the channel and smash those likes. Appreciate you, Dr. Rex. I could see it. We have some bids in that area. Yep, a ton of liquidity around 105K. Okay, I think I got to catch up in the chat here. 3K ETH looks likely sooner rather than later. We'll go into ETH right now. Mr. C, 82K is possible, but I think we'll see some major bounces before then. We could be, once again, the macro market structure might continue bearishly, lower lows and lower highs, but I think 96.5 is going to give us a good bounce, maybe even all the way back up to like 108, where we could back test that value area high. We're going to check ETH. Yeah, we'll check ETH. Quiles, what's up, man? Welcome in. Felix H, welcome in. Would along for maybe 105, be around that 105.5. I personally wouldn't be longing that. Let's see. Is that your 786? Your 786 is kind of your last hope in here. And yeah, we're kind of hitting the 786 right now. So we really kind of want to hold where we're at right now. And really close the daily candle back above 107.5. Really like above 108. AVAX and XRP, definitely, Sandy. We'll check those out. Chainlink, we'll check those out. We'll check out Chainlink as well. Good morning, Chicken Salt. Welcome in. And C-Train, thank you for the nice comment, man. I really appreciate that. And welcome into you too. Fettuccine Genie, what is up, man? Welcome in. Is it over? I'm not saying that yet. I'm saying it's getting more grim by the day. And if we close this weekly candle below our anchored VWAP, then I'm really going to have to shift some of my sentiment here. Okay, let's go ahead and run into Ethereum real quick. Ethereum, guys, I still am looking for the double bottom. Now, Ethereum, yesterday in the video, I said that I wanted to see this level hold. We had a daily level there. If we turn on our daily levels, we had a daily level of support at 3,800. We had our 786 there. We had our pitchfork band there, the top of your pitchfork band, of your macro pitchfork. We did not hold it. We busted pretty much straight through it, back tested as resistance, and now we're dropping. And I did say, guys, if we do lose this 786, go check out yesterday's video. I said if we lose this 786, we're highly likely not going to SFP this internal low, but we're going to come for the range lows. It's not the range lows, but this is the low that I was saying, the 36.73 low. And the fact that right now we're dropping to it and seeing a little bit of a bounce before actually grabbing the liquidity even does not look good. Money flow looks absolutely trash here on the 1 hour time frame. No bull divs in sight on the 1 hour time frame. I think, now I said this earlier this week on Tuesday, and I actually said this last week too. I've been saying this all week for a couple weeks, that since we made those lows on Coinbase, now remember, Coinbase is the most macro spot exchange, the largest spot exchange in the largest economy in the world, the United States. I think Coinbase is the chart to watch. Now, Coinbase, on that crash low, we hit directly into our macro 0.5 Fibonacci, which was our wave 4 target for our large Elliott wave impulse. It was also the bottom of our pitchfork band, and it was the bullish backtest of a breakout of a 4-year-long range of a volume profile for Ethereum. It was a very key level to bounce from. We bounced directly from it, but we did front run at the bottom of that box. We had a weekly level at 34.97, and we had a naked daily point of control at 34.89. And hitting that weekly and specifically that naked daily point of control would have been really nice, because volume support is always nice. And yes, we did hit the volume support of the value area high of the 4-year-long range. So what I was saying that is, if we do start to break down from this kind of triangle that we were seeing in here, if we start to break this down, first of all, you often see a fake out, and then you'll see the breakdown. We did reject up here from a daily level. I showed that in yesterday's video. We rejected from a daily level there. Now, all week long, I've really been looking for a double bottom where we come down to grab the liquidity from the crash lows, actually hitting that naked daily point of control and that weekly level. And then I want to see the big push up, because overall on Ethereum, I am still macro bullish. And what am I basing that on? So if we look at first of all, we have our pitchfork, and this is where pitchforks come into play as well. Very well. What is going on here? Okay. This pitchfork here, let me pull this all the way. You can see that it's pulled from the bear market lows up to the cycle highs from 2024 when we took out the prior highs, your prior highs. We SFP'd them just barely, and then we saw the multi-$1,000 drop back down to your macro 4-year long range value area low down here at about $1,400. Now you can pull a pitchfork from those key swing pivots because that was this cycle's high and this cycle's low so far. Bear market, cycle high, cycle low so far of this bull cycle. Now, from the bear market lows, cycle highs, cycle lows, you have your key pitchfork. And from that area, you can see this Elliott wave impulse is what I'm looking at to finish the bull market. And we, bounce from the value area low. Let me just hide this here. Bounce from the value area low of our 4-year long range. We chopped around within our pitchfork band, which I talk about it all the time. We often see ranges within the pitchfork bands, especially macro pitchfork bands, for a couple weeks after flipping your POC bullish. You can see your macro POC, you flipped it bullishly, back tested it as support, came up to your range, you busted out. Then you spent a few months, it was like 2.5, 3 months, chopping around the pitchfork midline. We did get that drop to backtest your very key anchored VWAP. This anchored VWAP would be like Bitcoin 74K anchored VWAP. And once we bounced from this anchored VWAP, you knew that the bullish momentum was going to continue. The bullish sentiment was still in. So we pumped, we broke above the midline, and we pumped to the upper band. We actually pumped breaking above the upper band. You can see here, broke above the upper band, back tested the bottom of the upper band as support now, and then we continued to the top of the pitchfork. We saw multiple rejections from the top of the pitchfork, and we had to get one last push up above to grab the liquidity from the all-time high. We had our all-time high that was ranging up there, and after grabbing the liquidity from your all-time high, you can see there, grab the liquidity from the all-time high, and after grabbing liquidity from the all-time high, rejection, pitchfork, so multiple rejections at the top of the pitchfork. It looked like a distribution range. I was saying this in the chat before it happened. Higher highs in the price action, lower highs in the momentum waves, and then as the range was forming, you were having money flow bleeding out. It looked like this was going to be a distribution range, and then we started distributing down to our major level of support. So, and this distribution could continue, by the way, if we are in a bearish scenario. But what we're looking at now is our wave 4 correction, right? So we have our Elliott impulse count of the 5-wave move. A wave 1, a wave 2, our wave 3, which came up to the all-time high. A wave 4 corrective move comes between the 382 and the 0.5 Fibonacci. And if I click on this same Fibonacci and we just look at our wave 4 targets. So when we were bouncing here, I was actually really bullish because we were bouncing right from the 382 after seeing a 3-wave corrective move down. I literally thought that this was going to be the start of a 1, 2, 3, 4, 5. But I was saying I'm really disappointed that we didn't come down to 3,500 because it was such a macro support level. It would have been nicer. Well, we got more of a complex correction in here, and we did come down with the crash down to that level. Even on Bybit, which wicked farther than Coinbase, we still did not hit your invalidation, which is this golden pocket at $3,200. If we hit this golden pocket, then we can no longer classify this as a 1, 2, 3, 4, 5, coming up to new all-time highs, potentially coming up to 6K into the top of our pitchfork, which is where I'm really looking to take all my profit on Ethereum and look for swing short positions. But if we come down and make a double bottom now of the bottom of Coinbase's $3,500. On Bybit, we wick to about 3,300. But on Coinbase, 3,500 would be really nice to come down, double bottom that. What I will say here is the range on Ethereum. Let's see, that's 2024 range. Let me get the big range here. So we'll go on to the weekly time frame. I'm just going to hide some of this smaller stuff in here. And we'll grab our macro range. So that's your 4-year long range there. And you can see the value area high on Bybit is at that pitchfork midline in that golden pocket. So even if we come down there, it will invalidate this as a 1, 2, 3, 4, 5. But we could even say in a more bullish scenario, now that we would have to say this is kind of like the super cycle. But because we hit that would be a 1, 2. This would be another 1. And if you come down to this golden pocket, that could be another 2 before seeing a 3, then 4, 5, 4, 5 to end the cycle. But that's hyper bullish. And maybe it's only going to come up to 10 or 12K. But I still am expecting a macro a bounce from $3,100 to $3,200 because there's a lot of support in this area, a lot of support in this area. But I will be expecting, based off of it invalidating this 5-wave impulse, I would expect a lower high before lower lows. Now it would be the start of a macro shift in trend. Because on Coinbase, remember, we have not taken out this weekly low. On Bybit, we took it out. On Coinbase, we have not taken out that weekly low yet. That weekly low has not been taken out on Coinbase. And so it would be a weekly bearish market structure break, along with invalidating the impulsive move by hitting the golden pocket. So that low at 33.50-ish. But what I'm looking for is to come down and double bottom our crash lows on Coinbase into the weekly and into the daily naked daily point of control. And then we might be able to get that one last impulse up to the top of our other pitchfork on Bybit at 6K. Pretty much 59.6K. You can see what I don't like what we're seeing here. This pitchfork's a little bit different, pulled. And you can see that this range here, instead of, remember on the Coinbase pitchfork, it's acting as support. Well, here it was acting as resistance. We rejected multiple times, got to move to the VWAP. And then after bouncing from your anchored VWAP, we came up to the upper band. We rejected the upper band a couple times, grabbed some liquidity over your range lows, and then we pushed and broke up above the upper band, but we could not make it to the top of the pitchfork. Now, oftentimes, just like on the total market cap, you will make it to the top of a macro pitchfork before seeing the major dumps. And so there is still a possibility that Ethereum can actually make it back up to the top of that macro pitchfork before, 6K or so, before seeing the real bear market price action come in. But right now, locally, I have to say this is pretty bearish this week so far. We lost the pitchfork band. We kind of consolidated in a triangle below our pitchfork band, and then we broke out of it to back test it, and now we're rejecting hard. So it does suggest that, yes, we could see a move down to $3,200, where, of course, this is going to be very, very key support as well. If we do come down here, guys, it's not like I'm not going to long this, because this looks like such nice support here. 2 key anchored VWAPs here. Your 4-year long range value area high on Bybit, not on Coinbase, but on Bybit, and your pitchfork midline. And if you lose the upper band of the pitchfork, you can expect to drop to the midline. But if we do bounce from there, what I would be looking for is a bounce and then a lower high to come in before making another lower low. And what you would do then in that case, pull your Fibonacci from the all-time high down to, I'm just going to put it on that $3,500 or $3,100 level. And you would be looking around this golden pocket, which would be another bearish backtest of your pitchfork band. So it would be something like this, a bounce here. I would long this, and I would be taking at least 75% profit if we hit that golden pocket, because you could do that. As far as locally, very, very locally on Ethereum, like today's price action, yeah, we're attempting to see an SFP of the lows at 36.73, but once again, we're front running the lows, and that's not a good sign. I just want to see what's Bitcoin up to. Okay. Yeah, Bitcoin's bouncing from the 786, and we are trying to get above this. Kind of a nice reaction that we're seeing here. Money flow is starting to curve over again. I wouldn't be so convinced yet. I'm yeah. I mean, I understand if you did take a long from that 786 there, but not for me. I'm going to be a little bit more patient with this because I see what has been happening. Okay, but anyways, we lost our local support that I laid out in yesterday's video. I'm just going to get rid of that now. And I do think that we're going to come down a little bit lower to at least SFP 3673. Did Bybit do that? No, Bybit didn't even take out those lows yet. So we're so close to grabbing that liquidity. I would not, I would suspect that we are going to come grab it at least. There's no way the market makers are going to do this and then just reverse right before, even though they kind of did do it right here. But that wasn't as close. So to me, it does look like we're going to come down, take out those lows. We could even take out the lows below that at, 36, 37 ish. But yeah, that's kind of what I got for Ethereum. So let me check the chat here. What's up, Bullish on Parade? Welcome in, man. It's good to see you. Just watch your BTC segment on 2x to catch up. Came to 92K in a different way. That's awesome, Bullish on Parade. I do think that 92 to like 89K is going to be a big support level. Let me go to Coinbase real quick, and I want to show you our macro range. Turn this on. Zoom out to the daily chart. And that macro range value area low at 92.5. Look at where our golden pocket pulled from the 74K lows to our all-time high. Wait, what was that? Yeah, 74K lows to all-time high. Your golden pocket, specifically your 0.65 golden pocket is right on that value area low. 92.5 there. That's looking pretty nice. And then, of course, we have some pitchfork levels there as well. I believe, okay, it's not on this chart. I'll have to pull that on the other chart. But yeah, that's a nice level. Yes, 5 days of straight dumpage. Doesn't necessarily mean the bull market's over, but here's another thing, guys. As far as macroeconomic news goes, we do know that Jerome Powell just came out and cut rates again 25 basis points yesterday. Well, 25 basis points is still in restrictive territory. And we know the jobs market is not doing as well. Like, we're not seeing the amount of job growth we want to see. And the biggest contributor to stagflation is job growth. So if we continue to see job growth kind of be lackluster and we continue to see inflation stay kind of creeping at higher ranges or not coming down as much as they wanted to, that is your recipe for the Fed. That is why the Fed yesterday said, you know what? We were absolutely planning on a rate cut in December. There's no rate cuts for November. So the next FOMC is in December. They said we're maybe not going to do a rate cut now in December. It's still up in the air. And it went from, if you look at the Fed Watch tool, yesterday before the FOMC meeting, there was like a 98% chance or 93, I can't remember, 93 or 98% chance of a rate cut in December. Now it's plummeted all the way down to 68%, or it was yesterday at 68%. So if the Fed pauses rates again, they're not going to pause for 1 month. They're going to pause for like a 3-month period and wait for more inflation information to come in. And that just could be a very bearish catalyst. That, along with the government shutdown, along with some of the cuts that the government's making, and no money printer going burr, could cause this bear market and trade war with China. If we do on November 1st, the tariffs are supposed to kick in for China. And so all of this is macroeconomic bearish news, uncertainty, which markets hate, which really could cause us to see continued downtrend. Okay, let me check the chat here. What were the other coins we were looking at? XRP and AVAX. Yeah, we'll look. Okay, so real quickly on AVAX, I'm still looking to come down to potentially our weekly level at 16.5. You can see we have a weekly level at 16.5. I have alerts set there, and then we have the liquidity from the crash on Coinbase. Now on Bybit, we dumped all the way to like 850. But the Pitchfork, we're at the Pitchfork band right now, and we're at the value area low of our year-long range. You can see this range goes back to December, 2-year-long range, December of 2023. So I can see right now, if you're longing right now, I even respect that because we took out the liquidity of the range low after the crash. Now, remember, this is after the crash. I'm not including the wick of the crash as part of, that was part of the impulse down to me. So as soon as that crash ended, we started forming a range. And today we took out the lows of the range, grabbed that liquidity, and we're coming down to your 2-year-long value area low in confluence with your pitchfork band, the top of your pitchfork band. So this could be an area where we could see at least a relief rally before coming down to 16.5, where it's the bottom of your pitchfork band in confluence with a weekly level, and it would also grab the liquidity from the crash lows on Coinbase. And so 16.5 to me is looking like a really good level to look for a long. As far as longing right now goes, are you really going to try to long? Look at this money flow. Look at no bull divs on the chart. Now, NAMI does have bull divs, and the money flow is starting to bottom out here. So, yes, I could understand if you want to, but we're fighting with losing for the day. Look at, we've lost the value area low, and we're trying to back test it and get back above it. But right now, we just kind of sliced right through it here. And now we're trying to back test it and see if we're going to hold it. To me, I think it's more likely we come down a little bit lower. Yes, that means you would be losing your value area low over the last 2 years, but money flow looks bad. Money flow looks pretty bad here. No bull divs on the chart, or I guess, yeah, very slight bull divs on the chart. Lower lows here, higher lows here, just barely. Money flow doesn't look the best. Let's go on to the 15-minute chart here. Okay, 15-minute chart actually doesn't look too bad as far as your money flow is on Market Cipher B is finally starting to bottom out and curve to the upside. And you do have bull divs in this kind of very aggressive descending channel. Now, remember, towards the end of aggressive moves, you get these slight descending channels. You get aggressive move down and then starting to get some exhaustion here. So if you can break that trend, and really to zoom in, let's go to the 3-minute chart. You want to kind of break that trend of this descending channel where the really aggressiveness started. So this is your descending channel of the last couple hours. If you can break above this right now and really break above your pitchfork midline at $18, then you might be able to make a move up, at least grabbing the liquidity of this liquidity trail here. So coming up to $18, you're 18.6 and towards the top of that channel. But if you reject here, then you're probably just going to keep chopping down until you get to 16.5-ish, where your weekly level is. And it looks like we are starting to kind of reject that. Yeah, and if we look on the 8-hour chart, 8-hour chart here, let me hide that channel. Okay, I do so you can see after the crash lows, we did have some nice bull divs here, 8-hour bull divs, and money flow was bottoming out. So we got that nice little push up here. We did not take out your range highs like Bitcoin did. And that was neither did Ethereum, and a few of the altcoins didn't take out the range highs like Bitcoin did. Now, if you would have taken out those range highs, I would have shorted the crap out of that because it was likely that we were at least going to come to test the POC of the range. But we're losing our range lows now even. And actually, I'm sorry, that wasn't your range highs. These are your range highs up here. Your dead cat bounce highs, because we're looking at that range after the crash. So after the crash ended, this is your range. And we're clearly losing the value area low today of your range. Pretty aggressively losing that value area low. Let's see if we can get some sort of bounce from this area. If we can get some sort of bounce from this area, I think we can at least back test that value area low at $19 pretty much before seeing a drop to 16.5. But money flow looks bad here, just crossing into the red, No bull divs anymore. Your bull divs, at least on the 8-hour, have been invalidated. 2-hour have been invalidated. So for me, I'm not really seeing a lot here. Maybe a little push up. That's it. Okay. That is about it for AVAX. XRP now. Let me just do this. We were looking at a couple things on XRP. So we're at our POCs. Now it's your local range POC, but it's also your macro range POC since December. We've been in kind of this, let me zoom out onto the daily. In this upper range, we pump 700% here. You can see this nice, huge, 700% pump. And since it ended, we've been ranging pretty much sideways for the entire year of 2025. But after making our new all-time high, we've been in this corrective channel. And we did bounce from the bottom of the corrective channel. We wicked obviously a lot past it. Let me hide some of this stuff real quick. Get rid of that. You can see that we are trading within this corrective channel. Rejected the top of the channel, came down to the bottom. Yes, we wicked way far past it, but we're bouncing from the bottom of the channel. Right now, we're at our macro POC. And if we lose our macro POC, I do think eventually we can grind our way to the downside where if it takes some time, that value area low is going to kind of be aligning with this channel. So we could be grinding for another month down here. But this does kind of look corrective here, and we might be able to make one more push higher. If we lose our value area low of this range again, it's not going to look good. Now, that's on more macro time frames, but let's zoom in now onto the 2-hour time frame, and we'll look at some of our smaller range since the crash ended. We're still at our POC as well. Your value area low just below, let me turn on these boxes now, is where I'm looking at a local support level. Value area low down there. Is also going to be your local 786 and your liquidity grab of kind of double lows. So what I mean by that is you had your weekend low that never got taken out the next Wednesday on the Wednesday low from last couple weeks ago. But yeah, if we can take out these two lows together into your value area low and your 786, that would be a nice little spot to look for long, 229-ish. And let me go on to the other XRP chart where, yeah, we do have that. Now this, I'm not looking at this anymore because we made a new high since then. But yeah, XRP, like we had this. Now, I have to say this, guys. In yesterday's video, I warned you guys specifically multiple times that if we start to see volatility kick in, these local support levels like this will get busted through so quickly, they'll act like they haven't even been there. And I discussed that during the Chainlink segment in yesterday's video. And I think it was during Solana's segment or one of the other two. But that's the thing we have to be careful with. When I lay out local support levels, but remember, these are very local intraday support levels. And if you do start to get more volatile moves, it'll just bust through it really quickly. Yes, you might get a small reaction like we did. We bounced from it, came back up to the value area high, rejected, and then you got your drop. So we are at support right now, of course, being the two POCs, two POCs of both your local range and your large range. And then also, I believe there was some other support there as well. Naked Weekly POC was there. And we're going to delete those. And your weekly level was there. So we're at kind of support, our support area on XRP. If we lose this, I do think we're going to come down to grab those lows into your value area low in your 786. From these lows to the highs. Now, on Coinbase, the value area low is below this liquidity, and it's a lot closer to your 786. I'll show you guys that real quick. See, it's a lot lower. It's lower than that liquidity, and it's a lot closer to the 786. And Coinbase levels are the levels, volume levels are the levels that I watch. So, yeah, around 229 to 231. If we lose where we're at right now. Okay, Chainlink. Let's go into Chainlink real quick. Now, if we bounce from, before we go into Chainlink, if we bounce from where we're at right now, we're losing our channel midline that was acting as resistance. We broke above it. It was acting as resistance here. We broke above it. We bounced from it once, got a small move up. Now, if we bounce from here, we do have to watch for rejection from that midline before continuing to work your way down. And you can see your VWAP is right around that midline, 248, around 248, and it's going to get a little bit lower as time goes on. If we break back above the midline, then I do think we can come up to the value area high, but watch, because if we see a 3-wave corrective move like this, And this up to that value area high, that's a 3-wave corrective move, and you start to reject from the value area high, you can expect another impulse down. And that value area high is going to come in around 256. Let's see if we have a naked daily point of control up there. No, not anymore. It was taken. Okay, Chainlink. Man, Chainlink is losing. Now, I've been talking about on Chainlink coming down to this $14 area for quite a while. And if we look at our macro range POC, that's a 2-year long range. That macro range POC is going to be right around the bottom of your pitchfork. And the thing is we've been chopping around in this pitchfork band, which in large pitchfork bands like high time frame pitchforks, you will often form ranges within the bands. And we were forming a range within the band after a crash, and it was this triangle that we were forming. And we're starting to break that triangle to the downside now. We broke through our local support level that I laid out in yesterday's video, like no support at all. And this is where I was saying in yesterday's video, guys, this is just local support. So please, if we get volatile, know that we could bust through this stuff super, super easy if we do start to see a big breakdown. And we did like no reaction at all through this box. It was our 786. It was our value area low. And it was the bottom of our pitchfork band because we did reject from the top of the pitchfork band, fell below it, kind of rejection, bounced from POC, another rejection from the pitchfork band. So I was thinking we could come at least down to the bottom of the pitchfork band. But no even reaction there at all. We didn't take any reaction from grabbing the liquidity. So now all that we have left is the ranged low liquidity at, let's mark that out real quick here. At 15.7, we could SFP 15.7. And if you do see a clean SFP of 15.7, I would look for a long there. But if we don't, I do think there's not much that's going to be keeping us from dropping all the way back down into this $14.3 to $14 area of support. Yes, you do have your liquidity from the crash lows on Coinbase at 15, but just be aware that this could be continuation. And let me zoom out here onto the daily time frame. What I don't like here that we saw on Chainlink is it does look like this could be a 1-2, 1-2. This could have been your big third wave. You're forming a triangle in a wave 4. You get a breakdown in a wave 5, and then you could see one more 4 and then one more 5. And that would give us enough time too where the bottom of the pitchfork is aligning pretty close with that POC of the range. And that's what this does look like now. It's starting to look like a double 1-2 impulse to the downside. You know, this 1-2, 1-2, your big third wave, 4 triangle, 5 taking out the lows from the crash, 4, 5. You need 2 4-5s now. You need, if you have 2 1-2s, you need 2 4-5s. But around that $14 area, $14.3 to $14, I would be looking for some sort of massive swing long or at least a day trade long that could bring you back up to back test the pitchfork band around $18 or so. Let me turn on our ranges. So that's your macro range there. But I do have to say, money flow coming out again on the daily time frame. We did print a hidden bear div on the last high of the triangle on the daily time frame on NAMI. Actually, both highs in the triangle, we printed hidden bear divs. And remember, hidden bear divs are continuation patterns. And what's our pattern been? Bearish, lower lows and lower highs. So it does look like we could come create a lower low, and that means below the macro low at $15. Yeah, and I mean, no bull divs on the 1 hour time frame, neither on Market Cipher B or NAMI. Do we have any 15-minute divs here? Yeah, it's starting to get some 15-minute divs in here, but that, once again, that money flow, it is starting to bottom out, but it doesn't look the cleanest here. And yes, of course, you have some nice bull divs here on NAMI as well. Let's see, we must be bouncing from some level of support. Let me zoom out here a bit and we will look at where are we bouncing from. 786 was already hit here, so you can't say that that was the 786 hit. So now let's look at this here. Okay, you're around your 786 of the next Fibonacci that hasn't been hit. Did we hit the 886? Not quite. And was there any other levels in there? Naked daily point of control. Okay, you have a 786 and a naked daily point of control where you're trying to bounce from right now. And no weeklies, no dailies. Yeah. And of course, this internal liquidity here from a Sunday. Okay. Markets are just preparing for the next big news event. I agree. Mark Dutch, we've kind of been in this holding pattern. And guys, Mark warned us of this last week during the stream. I think it was on Tuesday's live stream of last week. After the crash happened on that Friday, we came in and a lot of people were kind of really looking for positions. And Mark suggested, being a seasoned trader, guys, just wait for the market to settle a bit and wait for some clarity before. And of course, we were in this holding pattern. I talked about this too. A triangle is often a kind of a consolidation holding pattern until the market kind of decides what it's going to do. And a lot of the altcoins and even Bitcoin in some ways was forming this triangle. And now we're starting to see, after the FOMC meeting yesterday, and we got some clarity on macroeconomics, we're starting to see the market choose a direction. And unfortunately, that direction is to the downside. But yes, we are preparing for big events to come. And remember, November 1st and November 2nd are going to be big days because it is the cutoff of like a lot of money, food stamps, SNAP program, and also potential tariffs on China going back into effect. Looks like today is the first green day of the week. Oh, I'm guessing you were short. Okay. What's up, R Pink? It's good to see you in here, man. Oh, Mark Dutch, I think DDT. Okay. ZMX, welcome in, man. No worry about ever being late. And Mickey, welcome in as well. Ending QT does not mean starting QE. Yes, that's true. They actually said yesterday that they were going to pause the balance sheet. They're going to pause the balance sheet, and they're going to pause it for a little bit. So does not mean that they're going to start QE. Yeah. January. That's right. Didn't he say in January they were planning on it, but they're also talking about a pause as well? Yeah, we'll look at Odyssey. Welcome in. We'll definitely look at Aptos, Friday Crash Resistance. Friday Crash Resistance. If you draw a line on it, you'll see it's the critical support. Bilar, are you talking about Bitcoin on that, or are we talking about one of the altcoins we were just looking at? Okay. Nice little reaction though. Let's see. Is Bitcoin getting a good reaction here? Yeah, Bitcoin is starting to get a good reaction from that 786. Here's the thing, guys. Right now, let's watch this right now. If we do reject, we did just bounce from the 786, and whoever took that long from the 786, good job. But be aware, if you reject right now, the first of all, a daily level that we're going to be hitting up into, and the anchored VWAP is coming in right now. We're back testing. You can see here, we're back testing the anchored VWAP after losing it. So anytime you have a macro support that flips into resistance like this, you'll lose it. You'll have an immediate low time frame back test. If you reject, you can expect at least new local lows, and then you'll often see a larger time frame back test, and then back test, and then continuation down. Now, if we can get back above it, if we do this, we get back above it, then that's somewhat of a bullish sign, and we might be able to see a bigger relief rally to the upside. But look at we're starting to reject from that back test to the anchored VWAP. So be watching that. And if you did long that 786, I mean, I know you're looking probably for a big trade from this area, but I would be willing to take some out at that anchored VWAP just based off of the lack of bullish confirmation that we're seeing. It's the current support. Draw a line on the top 3 waves from Friday's crash. But are you talking about Bitcoin? Okay, top 3 lines from Bit. Hold on, 3-hour chart. Draw a line on the top 3 waves from Friday's crash. Okay, I see what you're saying. These guys here. No, yeah, nice little support level there. And I can see that, that was your kind of downtrend channel, your original channel. Actually, I would like to, let's pull that as a channel and let's see that. So you have your original channel, and that's your 1-2s in here. You have your kind of 1-2s in here. You got your big crash. And now, thing is, you could have said this was your 4-5s down here. And as long as we didn't hit the golden pocket here, you're good. 1-2s, that's your big 3. These are your 4-5s. That was the end of that impulse. And then now all of this, though, looks like it could have been a 3-wave corrective move, and now you're about to impulse down again as far as Elliott waves go. So finished impulse to the downside, corrective move, and now are we about to start another impulse to the downside? It's what it's looking like. And even if you look at these up here, it does kind of look like a couple 1-2s, and now we could be in a 3. But yeah, I see what you're saying there, Bilar. Yeah, of course, get those J hooks. Overall direction is bearish right now. It is, and Jay said 97K is a strong level. Yeah, I think the Bybit. So I'll tell you why Jay's looking around 97K, and that is because if you look at this 2025 macro volume profile, so it's from pretty much the beginning, beginning of 2025, or like November to December of 2025, the whole year's price action of this upper range. And you can see that POC is coming in around 96.6 to about 96.5. And then on some exchanges, it's just a little bit higher. But also because we have our key liquidity from our 3-wave corrective move. You saw this 3-wave corrective move here before continuing to new all-time highs, and that liquidity at 98.2. So there's a possibility we could come down, hit that, and see like a daily SFP of that, or even a quick 4-hour, on a 4-hour candle, an SFP into the POC, and then reclaim that low, and that would be a long opportunity for me. As far as other support levels in there, let's just turn on some of our support levels. Do we have any naked monthly points of control in there? No, our next one's at 84. Let's double check that. Yeah, next one's at 84. And then if we look at our naked weeklies, yeah, so no naked weeklies also at 84. Of course, we busted through one today at 107.2, or 108.1. Do we have any monthly levels down there? At 82, we have a weekly. Now we do have a fresh weekly, that weekly at 101. And remember, there's also a naked daily point of control there. And then as far as dailies go, we really don't have much below there as well. So see what's happening here, guys, is we bounce from the 786, but we are somewhat rejecting in our daily level. See our daily levels at 107.6, and also your anchored VWAP is there. So if we come up here and reject that, you can expect more downside to continue. Should have never shorted today. Man, if you shorted today, you should be. Oh, never longed. Oh, yeah, yeah. Okay. I see. Well, I took a couple losses on longs as well. Oh, Sui. Sui was that one that someone wanted to cover? I took a long on Sui on the SFP of this low because we did have a an SFP on the 15-minute, but then we crashed right away and I got stopped out. Now it wasn't my risk was calculated, so you lose your 1%. That's okay, you know. Now Sui, I'm looking at a couple things here. We were chopping around in this pitchfork band, and you can see this last rejection was at the top of the pitchfork band. We bounced from support yesterday, but we lost it with volume today. So I'm looking now because we didn't SFP the range lows after the crash, not including the wick of the crash, because we didn't SFP the range lows here. I do think we might be able to come all the way down to the bottom of the channel. And depending on how fast we get there, what I suspect is we will see some bounces in here and we'll start to do kind of this grindy thing here where we could come down and take the liquidity from the crash lows or even wick past it a little bit and hit that pitchfork midline around like 193, 192. But if we get down to that pitchfork midline again, I will look for longs down there. Aptos, that's right. We'll do Aptos here. Yeah, Aptos, we can look at BNB as well. Aptos is coming down. So I was long on Aptos all week long, and I'm so pissed off that I got stopped out. But I did take a good TP. It was a winning trade still. But we had Aptos, and I was looking for this to be a swing long. That's why I'm pissed off because we SFP'd our range lows down here at 307, and we saw a nice move up from there. And if you took that long off the SFP or even like the back test of the value area low down here a couple days later, it was really, really nice. But you can see on Aptos after, now let's zoom in onto the 2 hour, after taking the liquidity of the lows at 307, we've been forming this kind of range in here. And you could even pull this something like that. Rejected the value area high. We were bouncing from the POC, and that was also your golden pocket. And that's where we were at yesterday. Wait, which one was it? It was this golden pocket. It was your POC golden pocket, and we were bouncing from it yesterday. And I was saying, guys, if we hold this, I intend to add to the long, and we didn't hold it. And look at, we busted through it today. We're busting down. We're even losing our value area low. Even if you decide to pull it from the lows here, you're losing your value area low. It's the same value area low. And now we're coming down. We're bouncing from the liquidity grab of the original SFP, but we can't look at that anymore. Now we have to look at 295.8. And let's pull our fib. Yeah, you're around your 786. You're wicking past it, but you're around your 786, and you did grab the liquidity from all of these kind of choppy lows in here. So you grabbed that liquidity. I'm pretty sure you took this guy out. Yeah, yep. So it was a liquidity grab of that low, grabbing all this kind of chop, stopping out all this chop within here. And now if we can get back above the value area low at 312.6, you might be able to see a move up. But I would be just cautious because this does look like an impulse down here. You have your bunches of 1-2s, 1-2, 1-2, 1-2. Your big third wave here, so we might be getting some 4-5, 4-5, 4-5s until you take out your lows. So for me, the next thing I'm interested in is an SFP of 295.8. Unless we get back above, well, here's the thing, even if you get back above here, you could just be doing a 3-wave corrective move before making another move down through, seeing those 4-5s now. Because you saw all the 1-2s in here. You got your big third wave. And then now you got to see some 4-5s in here. And money flow looks pretty bearish. 2 hour just crossing over into the red. Nami heavily in the red, heavily coming out. 1 hour still looks pretty bad as well. No bull divs. 15-minute. Okay, 15-minute has nice bull divs here. And money flow's finally starting to bottom out. Some nice bull divs here and money flow bull divs. So for me, because we lost the 786 and I didn't get the SFP, that's a very shallow SFP, by the way. Very shallow SFP of that low. But technically, you did stop that liquidity out. If you can get back above your value area low, 312.6, really like 312.8, 312.7, I say, you might be able to see a nicer move up. But what I would be doing is taking a Fibonacci and looking at your wave 4 targets. So you might be able to get a move up to 321.9 or 326.6. And let's look at if that's even, let's say we reclaim the value area low. Your stop is going to go below that low. Your first target is only going to be a 1.42 risk-to-reward ratio. Your second target is only going to be a 2.13. And then if you hit your golden pocket, that would invalidate it, but that still would definitely be a TP for me just because it's also the POC of the range. POC value, golden pocket. Now, that might be nice if you're going to look for that. On the other hand, if you did long the SFP down here, I mean, and you give it some breathing room, even looking at those 382 and 0.5, 8 to 1, 10 to 1. I mean, that's super nice there. Okay. So yeah, for me personally, Aptos, if we SFP 295.8, I will definitely look for the swing long trade from that. And if we can get back above this value area low, we could look for a trade. The risk management's not quite there. Because I'm concerned we're going to keep chopping down after this drop. Yeah, let's see if Bitcoin can backtest. I mean, generally where we're at right now, the anchored VWAP and the daily are going to be, if we reject in this general area, I expect more lower. But if we can reclaim it, guys, it's actually going to look nice. It will be a deviation of our major support, and then we could get that pushback up. And once again, like I say this a lot, towards the end of a volatile move, you'll start to see this choppiness in a descending channel. And if you start to break that descending channel up, that's when you could see a bigger relief rally. So we're kind of trying to see that as we speak. Okay, BNB. Let's do BNB real quick. Now, guys, BNB is very interesting. So let me zoom out here onto, let's go to the 8-hour time frame. I shorted up here at on BNB at the top of our pitchfork, but let me hide this real quick. What we were looking at on BNB is it was super bullish. It was, bounce from the bottom of the pitchfork, 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 flip the band to support, back tested to support. You came up to your pitchfork midline, you created that triangle in here, and then you busted out of it and you flipped the midline to support. Now I long that midline, flip to support. You can see here, nice 3-wave corrective move down, hit into the midline. Automatically right there, that should have told you that's a long. We have one more impulse. That one more impulse flipped the pitchfork band, and we continued up to the top of the pitchfork. Now, of course, in the big crash, you crashed way low, took out the liquidity from that last impulse. But after seeing a double top and a rejection at the top of the pitchfork, what happened is you lost the band, back tested, reject, back test, reject, back test, reject. So I think we're at least going to come down and take out those range lows at $1,021. And if you also pull a golden pocket from the crash lows to the highs, the new all-time high, you turn on that golden pocket. Let's see, and let's make that, I believe that is Okay, that's only a 57% move. So, first of all, that golden pocket was already hit on the first initial low. So that golden pocket's kind of already been used up. You can see we bounced from it a couple times there. We're at the golden pocket again, but what you should be looking at now is the 786. Because that golden pocket has been tapped so much, you should be looking at that 786, and that 786 is just below your pitchfork midline. And then if we pull a range and look at, I mean, I'd be looking at this little range here. You're below your value area low. Let's look at it from the crash. Yeah, there's a possibility you could hold right now where we're at and see a little bit of a bounce, but and then the last range I would look at is this kind of sideways upper range here. It's not as nicely respected, I would say, because of this big impulse and then this big drop. So it's not really rangy price action. What I would say is you have kind of your upper range up here with, of course, that wick being like a deviation of the range. And now we're starting to form a lower range down below it. So this is the main range that I'd be watching. And you can see we're below the value area low. We rejected the POC. I do think it's probable we come down to $1,021. I just, even if we see a little bit of a bounce here, you just have to be careful because we could be seeing a bounce for a few hours or even half a day or so before continuing down. Nice little reaction, though. I have to say, nice little reaction from the 786 here on Bitcoin. And yes, this is the make it or break it zone for Bitcoin. It really is. Guys, if we close the daily candle below the anchored VWAP, it is not going to be good. Now, as we speak, we are literally at the anchored VWAP. Like, that's where we are at, the anchored VWAP from 74K. If we can close today's daily candle above it, we really do have some hope still because you can see these wicks that happen. And also, like I mentioned in yesterday's video, if you put your bull glasses on, left shoulder, head, right shoulder, it's still a possibility. Or a tap 1, tap 2, tap 3 in a model 2 distribution, accumulation. And then if you want to see impulsive price action, you want to see nice, quick, explosive 1, 2, 3, 4, 5. And I would like to come up at least to that 117.5 area from this impulse. And that would be just that 1, 2, 3, 4, 5 would be a wave one of a much bigger 5-wave impulse up to new all-time highs. Where if you watched yesterday's video, I kind of pulled the neckline. If we look at, here, let me just do this. If we turn on our pitchfork, and your neckline is pretty much where this pitchfork band is. You can see that's kind of your neckline in here. So if you pull a trend line from the head lows to the neckline, and you just throw that on the breakout, and you put it on the top, you can see that it would be coming in, around the top of the pitchfork, or it's not going to go straight up like this. What's more likely is you're going to get that big push up into 117, and then you're going to retrace, and then you're going to push up, maybe reject from this area, you're going to retrace, and you're going to see your 5-wave impulse where it's going to take a while, and by the time we get up there, it's going to be pretty close to the top of the pitchfork band again. Around 130K, maybe 135, 140. But guys, just be careful. If here's the thing, on volatile moves like this, like today, we just saw people getting stopped out. And actually, look at this. This is interesting. Before I finish that point, we are seeing fresh longs step in right now from the 786 touch, from the lows. Fresh longs are stepping in. So This is either going to be a really good thing and we're going to reclaim the daily level and the anchored VWAP and we're going to start pushing up and pumping here, or we're going to reject here, trap those longs underwater and squeeze much, much lower to take out probably down to 101K, where we have the daily level and the naked daily point of control. And even if we come down here and bounce from 101, I would be looking for a move to backtest the anchored VWAP on a higher time frame backtest before continuing to the downside. Do I ever use the anchored volume profile or just the fixed range one? Well, Odyssey, they're very, very similar. So, like, for instance, if I take an anchored volume profile, let me just show you an example of that. Let me turn off the macro range, and we look at our small range since the crash ended, and I turn on that fixed range volume profile. And so I'm measuring it. Let's go into the 2-hour time frame. I'm measuring it from right after the crash ended, but if I come in here and I take my anchored volume profile and I anchor it from that same candle, it's pretty much the same range. You can see that it's pretty much the same range. If I turn on the settings, let's put on value area high, value area low. You can see they're the exact same. So yeah, it's all you're doing with an anchored volume profile is, first of all, it's going to just show you on a different part of the Telegram, but it is not Telegram, it's TradingView. It is the same volume profile. It is measuring the same volume. You're anchoring it from a certain spot. So for me, a fixed range is just more convenient. Yes, I understand with a fixed range, you kind of have to keep updating it by pulling it over more as price action develops. Or you can even come on to settings and you can mark it so it'll keep extending it as more price action develops. But I don't like doing that because I like measuring a fixed range. And if I need to, I'll just manually pull it over more if we continue to build that range. Yeah, when everyone else is crying, it's the time to be buying. Money making time. I agree. Love Unlimited, I actually agree with that 100%. But the technicals right now are showing that we might just get another little bounce before more downside. Very similar to in here, we bounced and we were bouncing from the golden pocket. We saw a lot of people longing. First of all, there was a lot of fear when we were coming down to that golden pocket, but you just got a small move up before continuing down. So we could be doing the same thing, small move up before continuing down. And the reason I'm saying that is we don't really have much bullish confirmation on the chart. Yes, we are getting some green dots that could be confirming here, but there's no bull divs here. No bull divs on the 2-hour. No bull divs on the 4-hour. And your money flow looks like garbage. Even if you did have one bull div on the 4-hour, let's say that as we were coming down here, say we had one more bigger momentum wave right here, and we were getting bull divs coming down into the 786. Well, when you have one drive of bull divs, but your money flow is looking so bearish, you can expect a lower high to come in before another lower low. And then it creates another drive of bull divs. And that's when you see like a triple drive of bull div. And then by then your money flow should be bottoming out. That's when you can get the big move up. So I agree with you. I agree with you, but I'm saying technically it doesn't look like this is going to be the biggest of moves up. It looks like it could just be a small push up before rejection. Now, we could always be wrong with that. If we start to reclaim 108K, we could make a nice move. Institutions sold 470 million yesterday. Wow. Well, if institutions are selling, it is going to cause some selling pressure, but we also know those institutions are, if they're selling, they're not necessarily going to buy it back the next day. They're waiting for a larger drop, and then they want to buy it back at discounted prices. So, e.g., 92K, where the value area low is of your macro range, or even at fair value. If they're super bullish, they'll be willing to buy at fair value. Now, you don't really have an edge at fair value, but like say you have a watch you like in a store and it's valued at $10,000 and you really like that watch and you really you want it because you think it's a good asset that will make you money in time, it will appreciate in value in time, you'll be willing to buy it at fair value. Well, if institutions really think Bitcoin long term is a good investment and we do come down to that macro volume profile of 96.5K, and that's the fair value, they'll be willing to buy it at fair value. Say we come down here and we, they'll be willing to buy at fair value, and then maybe it's going to, make a nice move. But at undervalued price, which you also have nice support at 92.5, which is the value area low in your golden pocket, then they're saying, hey, we're getting it on sale. I'd say we do this, and then this. We're getting it on sale. Let's buy it now. Yeah, if we manual, I understand that. If we go to 92K, alts are going to be destroyed. A lot of alts are still near their crash lows, or like I wouldn't say near crash lows, but it's just, yeah, it's not looking good. They're a lot lower than they should be. Aerodrome. Wow. We got that crash down from this. We could have expected that. 1, 2, 3, 4, 5, maybe. That's your 5-wave impulse down. And then now you could be getting a corrective move up before seeing more downside. So let's see here. Be aware of 125 to 128. And actually, if your value area high is still there, yeah, be aware of 125. If you're long on Aerodrome, first of all, you have all these internal highs, the liquidity from all these internal highs here into your value area, your macro value area high, and your golden pocket pulled from the highs to the lows of this impulse down. So I would definitely be looking for a TP there and a potential flip short there. Actually, you can't even say that's a 1, 2, 3, 4, 5 because you have overlap. So you have overlap between your lows and your highs. You can see. So in that case, you would have to say that this was probably a 3-wave corrective move, and then this was maybe an X, smaller X, WX, and then this was a 3-wave corrective move and a Y. That was a WXY correction in there. And now you could be doing a 1, 2, 3, 4, 5. But either way, that's your resistance. You're going to want to take some TP there. 125 to 128. Yeah. And then once again, still, after you reject from this lower high here, you might be able to come down and hit this macro golden pocket value area low. Still looking pretty nice there. But it absolutely looks a lot better than a lot of the market. I'll say that. And let's see here. Let's look at some levels. Yeah, there's a weekly down there too. So very nice support at the value area low. Yeah, and you have a daily close by right before this nice push up here, these two imbalance candles. I mean, I would say this general area is a nice, between 55 and 50 cents is a very nice area of support. We did reject a naked weekly point of control, it looks like on Wednesday. Or yeah, yesterday. Yeah, and all right, so you've got some naked dailies on the way down and everything like that. I think you might be able to keep moving up a little bit more. Yes, you rejected yesterday from a naked weekly, but your market structure is still bullish here. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So probably continue up to that weekly there, or even up to the golden pocket. And then if we look at what was I just going to look at? Oh, I was going to check to see if that monthly was an old monthly. I think it is. Yeah. So that's been taken out. Be aware of this though. Starting to get some pretty big bear divs in here. Money flow bear divs. You came down to your golden pocket in your wave two. So yeah, that's nice. Like probably a wave one, a wave two. This is all your wave three in here. And then you could see a four, like the wave three might not be done. That's the thing. Your wave three might continue up to here. Then you're going to get a wave four and then a wave five. So I would be looking for this impulse to end between the weekly and that golden pocket value area high. Actually, yeah, your wave three is probably done. You hit your 1.618 and a naked weekly point of control up there. So now watch for a wave four retrace, and that wave four retrace could be retracing between the 382 and the 0.5. You actually already hit the 382, and now you might be going in one more fifth wave up. So look for the weekly and that golden pocket. But it does look like the impulse is intact. Yeah, 1.25 is your chance to sell, man. I would say so. Um, yeah, Mickey, it sounds like you really have your pulse on what the Fed is doing, and that's awesome, man. So, share updates with us, man, because I see you know what you're talking about. I try to pay attention to that stuff too because it is important. Do I see alts making it out of this nightmare? If so, what's your time frame? Man, I don't think we're gonna get an alt season like a lot of people predict. Here's the thing. Here's our total three chart. Now this excludes Ethereum, but let me zoom out to the daily chart, and we're losing your macro POC, and you're losing your pitchfork band. You're starting to lose your pitchfork band, so we might be coming down, and it might take some time, but we might be coming down to that golden pocket area down here, and let's actually hold on here. That is the wrong poll. Let me do that. Yeah, I mean, golden pocket value area low of the range here. You're still just ranging now on your total three. You haven't lost this range yet, this smaller range. You're at the value area low right now. But it doesn't look good that we're starting to lose this pitchfork band. And that doesn't mean that you can't get bounces along the way. You know, bounce, lose it, grab liquidity from the lows of the range, get a nice move up to backtest the value area low, and kind of chop down in here. I think that 786 is probably going to be coming in. Let me just make this right on. That's so weird. Look at when we're on the 3-hour time frame, the wick is a lot different. Okay, so look at that's where your golden pocket's going to be from the lows to the highs, and then if we zoom out to the daily, your wick goes a lot farther on the daily. That's a freaking something going on Coinbase because multiple exchanges. I don't know what's going on there, but depending on if you want to pull that golden pocket from the daily time frame or from let's check a 4-hour. Yeah, see now your low of the golden pocket's way down here when the wick ends up here. So that's some sort of glitch. You don't know which golden pocket to go with, but either way. There, and let's go onto the daily real quick. Jeez. But yeah, we're losing the pitchfork band, so we could drop to the bottom of the pitchfork. If we lose the bottom of the pitchfork, I mean, look at it's really held us this entire year. Major bounce. We expected a major rally. Got to move pretty much down to it. Got a major rally. So if we start to break, I mean, in some ways we already have broken market structure bearishly by taking out these lows, at least with a wick. Now, if you're not going to include that wick, just because all the exchanges kind of had such volatile price action, if you break that wick at 924 billion, it's going to be very bad. You're changing market structure bearishly. And what I would say is you were trying to get above the value area high. You can see value area high acted as resistance, You broke above it, back tested it, made a new high, but then you fell back inside, bounced from your POC in the pitchfork band, and then this was a failed auction up here. You tried to get above your prior highs, and you tried to get above, maintain above the value area high. But when you couldn't, you see you SFP'd your prior highs, and when you fell back inside your volume profile, already that's a bad sign. But after falling back inside the volume profile, we back tested the value area high, and we rejected. So there's possibility you could come all the way back down to value area low. And it's because you're losing your POC as well. Your POC rejected this week, at the beginning of this week. So unfortunately, it does look like altcoins could have more downside here. And same thing with Total 2, which includes Ethereum. Rejected the POC. You were above your range, failed auction, got back in. Another try to get above the range. You just took out liquidity, fell back inside, back tested, rejected POC. Now you're at value area low. So if this value area low doesn't hold, you can hold it and make another push towards the top of the range. Or if you lose it, you're probably going to see a pretty big drop in here. Maybe even all the way down. Gosh, that would be horrible. You're also losing your channel midline. Okay, what is going on with this channel? This was an example I was showing of Elliott waves. Anyways, guys, that's kind of what I got for today. Let's check Bitcoin real quick here. It looks like, unfortunately, are we seeing that rejection? It's iffy right now, but we're trying to reject that daily level. And that daily level's pretty much at your anchored VWAP. So watch for a close. Let's just zoom out onto the hourly. Watch for a close above or below really 107.5. If we close below 1075, it's not going to look good. You are seeing a very nice bounce from your 786, but be aware because it could just be a fake out like this thing was right here last night before more downside. But I will be live tomorrow. I'll be live 3 p.m. Eastern Standard Time. I really hope you guys come and join. We've had some great price action. Now, guys, on the channel, I really do want to start focusing more on finding trades. I'm not going to force trades just because we're live, but I do want to start getting in on some of these trades and showing you guys risk management because I get a lot of DMs about risk management. I get a lot of DMs about first of all, finding levels, but also like how to execute in a trade. So I really do want to show you guys a little bit of that strategy. Really, it's a must. It's a foundation of trading, and we'll start, really trying to develop as a community. And just thank you all for being here so much. I really appreciate you. Please hit the like button on your way out, and I will see you tomorrow, 3 p.m.